Hi guys, this is Mosh. Today I'm going to give you my Freetrade portfolio update. As you probably saw from the thumbnail, my portfolio is over 4,000%. But on this channel, I always want to be as honest and as transparent as possible because I think in the world of finance, you don't get a lot of that transparency. There are other finance YouTubers in the UK that show you their Freetrade portfolio update. But if they don't tell you this one thing, they're lying to you. Now, Freetrade give a free share worth up to £200. And if you want your free share, you can use my link in the description box below. Trading 212 also give a free share worth up to £100. And again, you can use my link in the description box below. Just make sure when you sign up to both of them, you deposit £1 to get your free share. Now, the only incentive I get is I get a free share too. Now, what Freetrade do is because I didn't pay anything for the free share, they add that percentage to your portfolio. So when you see other YouTubers with massive percentage on the Freetrade account, just be wary of that if they've not mentioned it, because most of it is probably due to the free shares that they've received. My ISA account is Trading 212, so most of this year I've been using that, and I'll be using that until April. When the new tax year starts in April, I'm going to start looking at other providers for my ISA account. I'm actually not too sure what free shares I have received. I've got the notifications, but I've not gone into the app. I wanted to make a collection and open up for the videos and see what companies they've given me. If you watch my earlier videos, you'll know that I'm actually a shareholder of Freetrade. I bought just over 600 shares during the crowdfunding days because I think it is a really good startup company, and I think over time, if they keep that good level of customer service they're providing, they could potentially overtake Trading 212 in the future. So let's jump into the Freetrade app and see a breakdown of my account before I go into the actual shares. Portfolio performance, you can see, is 4,243%, which is really good, but the reason it's that high because it's made up of entirely of free shares apart from one share. 93.2% is stocks and 6.8% is bonds. Okay, that's interesting. So let's go into the portfolio. You can see the total portfolio value is £391. Now, I don't want to sell any of these shares, especially within this tax year. Because of capital gains tax allowance, I've used it all up. So if I do sell, it's going to be after April. Okay, so I can see the first one is a company called Redrow, 6 shares. I'm actually not sure what it is. So if I scroll down, okay, so this is actually a decent one I might actually keep. I can see that they build houses around the UK, and I think UK housing industry is something that will continue on quite strongly throughout the years. And they even give a 1.1% dividend yield. Okay, and the PE ratio, the price to earnings ratio, is 16.5, which is pretty decent actually. Big Yellow Group, obviously I know they're the storage company. Again, let's look at some details. Okay, that's pretty good actually. They give a 2.97% dividend yield. And the PE ratio is about 20, which isn't too bad. But obviously, when you look at PE ratios, you should always compare it to the industry. Okay, the next one is looking decent, a FTSE UK all share. So I'm guessing it's share in the UK FTSE, the top 100 or 250 companies, whatever they're using. And it is an ETF and with a 3% dividend yield, which is really good actually. So this is probably something I'll just hold on for a long time and just collect the dividends, even though it's not going to be much. Dropbox, I've used Dropbox before, and they're a cloud data company, it's saying, and expanding into productivity and business software. I'm surprised that the share price has been going down because cloud data businesses have been doing really well this year. Okay, this is an interesting one, aging population. I'm guessing it's an ETF because it's by iShares. iShares are run by BlackRock, which is one of the biggest finance corporations in the world. Okay, there is no dividend yield. It's an ETF that tracks an index of emerging market companies whose revenue derives from the world's aging population. That's something I may need to look in because I don't quite understand what does it mean by aging population. Is it investing in like bonds, or are they buying what only old people are buying? It doesn't make sense. Okay, the next one is British Land. So if we jump into it, okay, again, good. It's a 1.72% dividend yield, PE ratio 4.45, which is really good. You know, that's a very low PE ratio. And they're a real estate company that invest in commercial and residential properties. Moonpig, I've heard of. They produce gifts and cards online. So let's have a read about it. No dividend yield. Scottish American. Okay, this is a company I've not heard of, so let's jump in and read about it. Okay, very healthy dividend yield, 2.66%, which is not bad. And they focus on global equities, bonds, properties, and the main goal is to produce a dividend. Next one is Edinburgh Trust. I'm guessing this is some sort of ETF. Oh, no, it's not. Okay, so they have a 4.36 dividend yield, which is really good. And they invest in energy, industrials, and tobacco. It's a pretty good share I've been given. Next on the list is UK Property. So let's jump in and see what it's about. Okay, 1.93 dividend yield. And it's an ETF that is composed of real estate companies. Okay, they give me a lot of real estate companies around the UK. I don't know what's going on, Freetrade. Next company, Inseego, if I've said that correctly. Okay, 1 share, no dividend yield, and it's a software and hardware company. Again, I'm not sure what it's really about. Trainline I've heard of, and Trainline I use. Is basically to book train tickets online. Okay, no dividend yield and a P ratio of 29.24, which is quite high for a company like Trainline. Next company, we've got 2 shares of Cemex. I'm guessing it's a building company. No dividend yield, and it makes and sells cement and concrete and other building materials to businesses across the world. I'm surprised they have no dividend yield, this company, because cement companies and steel companies and stuff like that, because they're on such a vast scale, they normally give some sort of dividend. Next one, again, is an ETF because it's by iShares. It's MSCI India. So let's have a quick read about it. It tracks the 100 large and mid-cap stocks trading on the Indian stock market. I mean, this is quite a decent one because India, they say, is a growing economy and is predicted to be the next big economy in the world. Next one, we've got 1 share of Fresnillo. I have no idea. It's a gold mining. Okay, 1.25 dividend, which is decent. Okay, it mines for gold, silver, lead, and zinc. Next company is Paragon Banking. I'm guessing this is a banking company. All right, it's mortgages. Wow, this is a very good dividend yield. 3.21% dividend yield. I'll be honest, I've never heard of this company in the UK. But that dividend yield of 3.21% and a P ratio of 12.47%, it's looking pretty decent actually. Next one is MSCI China. I'm guessing this is an ETF. 0.84% dividend yield, which is a little bit low, but it's better than nothing. And yep, it's just investing in large and mid-cap stocks in China, which is again another decent one because China is one of the world's largest economies. Next, we have 2 shares of Israel Chemicals. 1.73 dividend yield, which is pretty decent. And I'm guessing it's a company based in Israel that produce chemical products for the engineered materials, agriculture and food industries. Okay, another interesting one. Next up, we have 1 share of Naked Wines. I'm guessing it's a wine company. No dividend yield and a really high PE ratio, 66%. So this is a firm that supplies various wines throughout the UK. Customers have the option to purchase by the caseload or individually. I've got 2 shares of Zovio. Okay, saying it's an education company. No dividend yield and there's no P ratio. The company provides for-profit educational services. It owns Ashford University and Full Stack Academy. What I'm noticing as the years go on, the UK education is getting more and more privatized in the sense that there's a lot of private companies that are running the exam boards, providing software services and hardware services around the UK. Next up, a company called Tate & Lyle. It's an ingredients company. Wow, a very good dividend yield, 4.07% and a pretty low PE ratio, 13.77. But obviously bear in mind, I don't know what the industry PE ratio is for this company, so I can't make that comparison. So they focus on refining ingredients to sell in industrial food producers. Okay, I think this is quite an interesting company. I may look into a bit more. Next, we have 1 share of LG. Okay, they make obviously TVs and other things. So no dividend yield and a P ratio of 1.43. Is that it? 1.43. Wow, that seems really, really low. Next up, Coeur Mining. I think I've said that correctly. Yep, mining company, no dividend yield and a very high P ratio of 81.91. Operates precious metals across Canada, US, and Mexico. It doesn't even say what precious metals they're dealing with. World Mining, 3.75% dividend yield and a P ratio of 26.14. Like it says, their aim is to maximize total returns. So I think they're more focused on the dividend yield and providing a dividend to its investors. All right, Fallen Angels. This is an interesting ETF. It's an iShares Fallen Angels high yield corp bond. Okay, so it's a bond with a 4.23% yield, which is really good for a bond, especially now. Next up, ETP. It's gas pipes and a really good dividend yield, 7.98%. And the energy sector is actually recovering a lot this year. And I think it will continue that trajectory onto 2022 as well. Next up is Global Corp Bond. So let's have a quick look. 2.34% dividend yield, which sounds about average. It's an ETF that provides exposure to investment grade global corporate bonds. I'm guessing it buys company bonds and bonds from emerging markets. Next up, 1 share of Global Government Bond, 0.76% dividend yield. And it's an ETF that provides diversified global exposure to government bonds. The US and Japan, so mainly US and Japan, make up 60% of this, which is quite interesting. 2 of the biggest economies. Next up is TIPS, inflation protected bonds, 1.86% dividend yield, and it tracks the performance of inflation linked US government bonds. Okay, like the 10-year treasury and the 5-year treasury bonds. Next up, another bond, Global Aggregate Bond, 1.44% dividend yield, and it gives diversified exposure to the global investment grade debt market, government related, corporate and securitized bonds. Now, one thing about bonds is generally the older you are, the more you should reduce it in stocks and go into bonds. Bonds are only worth it if you have a large amount to invest. Otherwise, if you got like the odd £100, £200 there, to get 1.44% on £200 in a year is basically nothing. There's no point. Next up, 1 share of ITM Power, no dividend yield and a very high PE ratio. It's working to reduce the cost of hydrogen production in Euro, US, Australia and Canada. Okay, this is an interesting one. I might do more research into this company. Dr. Martens, I know they make shoes. No dividend yield, no PE ratio either. Another ETF, World Small Cap. No dividend yield, which is not surprising because it's small cap. They don't barely make profits and they track small companies around the world. Page Group, no dividend yield and a 14.85 PE ratio. And the firm operate worldwide, providing recruitment solutions for office professionals to firms on both permanent and temporary basis. All right, this company is probably one that's going to struggle, especially in the upcoming months when stimulus starts winding down and tax hikes and things like that come in. Save SP, I think it's called. 3% dividend yield and a very low P ratio, almost 6. And they provide sewage, water and waste solutions to businesses and individuals in Brazil. Okay, this might be actually a very good one because people go for these like, cannabis stocks, tech stocks, all futuristic stocks. But people forget, company providing sewage, water and waste solutions, they can actually make really good profits. And it shows they're given a 3% dividend yield and humans will always have waste. So it's a company that's not going to go away anytime soon. Next up, Fraser Group, no yield, and it's a controversial brand. This sports goods retailer owns brands such as Lonsdale and Slazenger. Okay, like the cheap sports goods basically. Mining company, let's quickly go and see. 0.23 dividend yield, which is next to nothing, and it operates set fine precious metals. Countryside Properties, I know this one, no yield and a very high P ratio, and they build houses around the UK. Standard Chartered, 1.4% dividend yield, and they specialize in international banking, and I think the banking sector yet still to recover. Next we have Avast, which is 2.35% dividend yield, and I actually use them on my laptop myself. Impacts Enviro, 0.51% dividend yield, and it focuses on technology for cleaner and more efficient environments. Royal Mail, I actually had a lot of shares in Royal Mail last year, but I sold out because they stopped their dividend. S4 Capital, advertising company, no yield and a very high PE ratio. That's crazy, 164. China Special, okay, this looks interesting. So 0.98% dividend yield. It invests specifically in Chinese companies spanning technology, industrials and healthcare. Okay, I think this could be a very good investment, this one. Ashmore Group, emerging markets funds. Wow, a very good dividend yield, 4.1%. And it provides debt and equity based funds focused on different emerging markets. So I know there was a lot of shares to go through. Hopefully you enjoyed that update and my Freetrade portfolio.